Hey guys, this is your girl Paula, the Queen from Queens. These are Money Minutes That Matter. It's a talk show where you call me with financial questions and I'll give you financial answers. On this show, we become accountability buddies. We'll walk hand in hand to eliminate debt, to help you maximize your financial future, and to optimize your health. On this show, I call them the cost of living. This is my special monthly segment where I bring on my resources to become your resources. Today, we're talking about real estate, becoming a homeowner, and how to build equity and financial wealth. Join me as I welcome my friends, Deirdre and Carlos. Hey guys. So, buying a home is the American dream. I lived in an apartment all of my life. I lived in Section 8 housing. I lived in the projects. When I got married, we lived in an apartment. And I was 8 months pregnant with my second child. And my husband said, we're going to buy a house. I'm thinking, I'm not buying a house. I saved enough money just to stay home for a year with my child. I had no interest in buying a house. But my husband, he saved $200 a year for like 5 years working at AT&T. And we had a down payment for a home, bought a home in a beautiful community. So I think it's important that people know and understand what the home buying process is. So I have you, Deirdre, here as a realtor, and I have my friend Carlos here as a mortgage guy, so we can talk. I've known you guys, Deirdre, you and I go to church together. Carlos, you and our neighbors. Our girls went to school together, and now they're both college graduates, and they're both nurses. So I'm really happy to have both of you on the show. So Deirdre, how do you get a client and hold their hand and get them to understand the home buying process?
Well, first of all, thank you again, Paula, for having me. I'm quite honored. You could have any number of people here this evening. So I really appreciate that. And I'm really excited to be able to talk about my process here. But I think the main thing that I want in a client, I want them to understand that I care. They don't always care, or it really doesn't always matter how much experience you have, as long as you do a good job for them, and as long as they know that you care about them. And when you're with them, they don't care that you have 5 other clients that are calling you. So one of the things that I try to do is to make them feel like they are special, and they actually are. It's their time. I've carved out that time for them. So what when I do my buyer consultation for buyers, I have a tendency to make sure that they are comfortable talking about what their needs are. They have to be realistic about their desires and where they want to live. And so I just try to have them kind of talk about their why. Why are they buying? How soon do they want to purchase? Are they really ready to purchase? I'm really glad to have Carlos on here, because that's an essential part of the buyer consultation, because the first thing people ask me is, how much is my mortgage going to be? And I've had mortgage lenders say, stay in your league. That's my territory. And I love that, because I sometimes don't always have the answers. Well, I really don't have the answers. I can give them a ballpark figure, but I don't like even doing that. But I always say, I stay in my lane, and I defer you to the expert in that area. So okay. They always want to know that question. But I try to let them know that we're partners in this. We are partners because I'm kind of the nucleus. I kind of help them, send them to the mortgage broker, and then we get the title company. Then we also have to do the home inspection, and I'm also guiding them to the homes that they have chosen to look at. So I just kind of want them to know that it's a partner, and I am not the driving force, but I'm helping them to make the decisions. And it's interesting, because sometimes it just evolves. It's kind of interesting, because I used to do, I'm not used to, I still do interior decorating, because I've actually incorporated that and I do a lot of staging with my listings. But people always say what they always kind of know what they don't want, but then when they go into a house, they don't realize what they do want.
Okay.
So it's quite interesting. Yes.
So the overall home buying process includes homeowner financing, of course. So that's why you're here, Carlos, to talk about money, 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 money. So, right, I want to believe that the debt to asset ratio should be like 43% for an individual.
Well, I'm sorry, I don't mean to interrupt you, but
you're good. You're good.
With the company I'm in, we have a little bit more of a leadway. So there's two different kinds of loans. There's conventional loans and FHA loans. FHA loan is a government loan, mostly for first-time home buyers. And for that, the DTIs can go from 46 to 56%, depending on credit scores and income. With conventional, we can go up to 45. So it really it depends on credit nowadays. The better your credit, the better loan you're going to get.
So what is a good credit, Carlos? Am I looking at a credit of 600, 700?
Anything above 720.
720 is excellent credit, yes? Okay.
It's not excellent, but it's where you want to be, at least at 720. Yeah. So I mean, I can go, with an FHA loan, you can get a loan with FHA up to 620 with a 620 credit score.
Okay. And does that have the person to have a much higher interest rate?
Nowadays it's very competitive. Right now, I have a customer that has a 640 credit score, and I'm giving him a 3% rate.
Whoa, that's amazing. Yeah. Now, is that because of COVID? Those numbers are incredible.
That's just the market right now.
3%. That's fabulous. On a 30-year conventional fixed?
No, that's on a 30-year FHA loan.
FHA loan, okay.
Yeah.
And FHA, for my listeners and my viewers, means?
Federal Housing Administration. It's a special loan.
Okay.
But you don't have to be a first-time home buyer to get that loan. As long as you don't own another property, you can do that. Because the difference FHA to conventional is mortgage insurance. FHA, the mortgage insurance is for life, for the 30 years of the life of the loan. With conventional, once you hit 75 loan to value, it disappears.
So let's talk about PMI, right? Because we're jumping all over here and I love it. So PMI is private mortgage insurance. It's where the bank says, I don't trust you because you haven't put 20% down. So I don't trust you. So I need you to be vested. So in case you fault on the loan, this insurance protects the banking institution, not you. Correct. So I didn't know that FHA is a lifetime. You can, no matter how much you pay, you never get rid of this?
The only way it's less is if you put down 10% or if you do a 15-year loan. In that case, it's 132 months.
So when you do a conventional loan, once you get 20%, you can at some point get rid of PMI, correct?
If you have 20%, if you put in 20% down, you don't have mortgage insurance.
But when you build up equity of 20%, does that also eliminate your PMI?
It needs to be 75.
75%?
Yeah, to get rid of the MI.
What?
Mm-hmm.
I bought my first home 20 years ago, and I knew absolutely nothing, Deirdre. I had a realtor saying to me, oh, let's buy this. She looked at our numbers, and she says, you can buy a house that was well beyond my comfort level because I didn't want to be house poor. She took us to this beautiful, beautiful house in a beautiful neighborhood. And once we ran the numbers, I was afraid. I was afraid of being in a position where we could lose it all. So my husband and I tapered it down and came down by a third in terms of looking for a house. So how do you direct your clients into the right communities? Because communities make a difference. You want to be in a position where you can build equity, where you have good schools, and you meet the criteria of your client. How do you do all that?
Well, that's a really good question. One of the things that we are not supposed to do is to direct our clients into a specific community, and we're not supposed to direct them to a specific school. What we try to do is to help them to understand the specific price point that they need to be at. And we actually let them do the homework as far as the locations where they want to be. We tell them to contact the schools, find out the different programs that they had. I just had this conversation with a lady the other day. She kept trying to pinpoint me, and I said, we can go to jail for telling you, this is, and most people will take the highest amount that they're qualified for, and they'll buy a house, and they will be house poor. So what I try to do is to get them to see, I talk with someone like Carlos, and I say, talk to your lender, find out what the payment is actually going to look like.
So you said talk to your lender. So are we saying that we ask our clients to get pre-qualified? Do they come to you, Carlos, first and say, what do I qualify for? Or Deirdre, you as the realtor, direct your client towards the mortgage person that you're using. How does that work?
Can I say something? Yes. So I love pre-qualified and pre-approved clients. One of the things that we try to explain to people is, or I try to explain to my clients, is you want to get the pre-qualification and more so the pre-approved. There's a difference, and I'll let Carlos tell you the difference. But you want to speak to your lender first, because if you start looking at a house and you fall in love with it and you say, oh, I want to put in an offer, I'm going to go to my lender, my loan officer, and by the time you get back, the house is sold. So you want to already have your ammunition with you when you go in.
Yeah. So Carlos, Hugh and I are in agreement. Hugh and I, we're ready to move. We've been in an apartment all of our lives. We come into your office. Walk me through the process of getting pre-qualified or whatever needs to be done. Because I've never done that. I let my realtor kind of direct me. So what do I do? I'm in your office. I'm saying, hello, Mr. Winfield.
Well, what I do is I usually like to see, your income information, assets, pull credit. Then I put all that information in a computer, and it tells me this is how much you can qualify for. Now, what I do for my customers is, because I don't like people to go look at a house and not know what the payment is. Mm-hmm. Because one, it could be too high, and you fall in love with this place, and you don't qualify. So the only person you're wasting time is the agent. Okay, so every time with all my customers, every property they want to see, I have them send me the property. I will put it in my computer, and I tell them, okay, this is how much you're going to need. This is what your payment going to be. You can go up a little bit if you need to, but at least you don't go blinded to see a property. Because okay. I done it.
So I'm in your office. Hugh and I are there. We have our recent pay stubs. We have our 401k information. We have our bank information. What are you telling me? What are you saying to me? Paula, my debt to asset, I'm less than 30%. What are you telling me, Carlos?
I'm telling you, we can go up to 400,000. You're going to need this much for down payment. If you need some closing costs, there's programs, or we can get, the seller to pay for it, even though at this time it's not possible because it's a seller's market. So, you leave my office with a letter that says that you're pre-approval.
Okay.
And
so like then I went to you first, and now I'm going to Deirdre?
Exactly. That's the way it should be.
Nice. Yes. So when you talk about what you qualify for, are you talking about just a mortgage? Are you talking about mortgage insurance? Are you telling me about my tax structure?
I tell you everything.
Okay, that's important.
So your payment, when I tell you what your payment is, it's going to include your taxes, your insurance, your homeowner's insurance, your MI. I even put if you're looking at a townhouse, I even, estimate an HOA, so that what to expect.
Good. Because there has to be some kind of truth in lending. I mean, we need to know what we're going into. Deirdre's talking about redlining, where you can't direct the client into this particular community. Correct. Because we know individuals of color, Individuals are directed away from certain communities because they say, we don't, this happened a lot in the 80s and 90s, although the Fair Housing Act happened in the 60s. We saw still a lot of it in the 80s and 90s. So I'm glad to hear that there's truth in the process, that we're not being redirected, because I didn't know anything. At the point I was 8 months pregnant, I said to Hugh, listen, I want a house on a cul-de-sac because I want my kids to be safe. I want hardwood floors. I want 2-car garage. I want 3 bedrooms. I want a finished basement. That's all I knew. And the realtor did everything else. So let's talk about, Deirdre, walking me into a house as a client. I'm your client and I want a 3-bedroom house, 2.5 baths. What are you showing me?
I am showing you the perfect dwelling. That is something that, that I like to tell my clients. I want you to get into the house. And once you get into the house, you'll know whether or not it's for you. So you have to feel it. So be open-minded. That's the one thing I tell people. Be open-minded, because it may be something that you may not have thought you liked, or there may be something in there that you've never seen before in a house. You're looking for something that speaks to you. So I can usually tell if someone really likes a house and if they don't like a house. Give them, if they have any questions about specific things, there's usually some information, like an information sheet there. And oftentimes I give them something before we go in. Prior to COVID, a lot of people aren't taking paper, but I try to give them some information. And also what I try to do also, I'm not going to say I try to, I usually have them take notes, and because they'll be looking at so many homes and they'll get confused. And I've had people say, now what was in that house and what was in that house? I just try to help clients through it and just tell them to take notes. I think that's probably one of the things that I like to do.
So buying a home is the American dream. And I have an article here that comes from keepingcurrentmatters.com. And it says the net worth of a homeowner is 44 times greater than a renter. And then it talks about owning a home is a great way to build family wealth.
Yes.
The greater equity in your home gives you options. So it talks about why it's important to be a homeowner. And there were some startling numbers in here that I want to read to you. It says the study revealed that the median net worth of a homeowner was $231,400, a 15% increase since 2013. At the same time, the median net worth of renters decreased by 5% to $5,200 today, compared to $5,500 in 2013. So we're saying home ownership is generational wealth.
Indeed.
Indeed. So I bought my house, Carlos, my first house, I bought it in 1997, having my second child. We bought the house. It was a buyer's market. You're saying right now it's a seller's market.
It is really bad right now.
I bought my house for $210,000.
Oh,
it was awesome. It was in a nice community, great schools, cul-de-sac, all my desires I had. It was a very rural community, and being a city girl, I had to do some adjustment, right? But when I sold my house in 2009, I sold it with no realtor. Someone was looking in the community, wanted to buy my house. Someone recommended I sold my house for $450,000.
wow.
So more than 100% equity gain. So talk to me, Carlos. What is it about building equity and being a homeowner?
I mean, who doesn't like savings? I mean, when I meet with my customers, one of the things I ask is, how much is your rent? And in this area, I mean, a 1-bedroom apartment, $1,600, it's crazy. And when you tell them, if you're looking to buy something in the 200s, your payment could be about $1,600. They're like amazing, because they don't even need to. I was talking to a young kid a couple of days ago. He's 24 and works for the government, and he wants to buy a house and his dad tells him, oh, you need 20%. You need to save 20%. And I'm talking to him and I go, no, don't. You can get in with 3%. If you have good credit, all you need is 3% down and some closing costs. And he goes, what? He goes, okay, I'll be ready at the end of December.
Oh, wow. That's excellent.
Yeah. I mean, because right now he's renting and he's paying $2,000.
Yes.
But people don't know that. People don't know the pathway to home ownership.
True.
And the problem too is that so many of the people who call into my show are bogged down with debt. They can't see clearly. More than 80% of Americans are living paycheck to paycheck. No one has an emergency fund. We all look at MasterCard, Visa, American Express, Discover as our ticket out. So we don't recognize just by incrementally saving over the course of time, whether it be like your client 4 months or 4 years, it's all possible. We've got to help people to recognize that the pathway to home ownership is real.
If you want to, you can do it. People are buying houses. That's why it's a seller's market. Because there's a lot of people looking at buying houses.
Why is that? I mean, you would think with COVID, people would want to keep themselves tight. I had a friend who sold a beautiful home a mile from me. One of the big homes, she was an empty nester like we are. She decided to downsize. They're moving to Florida. But her house sold in days.
It is nuts.
Buyer's market versus seller's market. Tell me about that.
Actually, that should be something Deidre should answer.
I'll be glad to. I saw her. Yes, absolutely. Well, it's interesting. At earlier, I believe it was probably closer to a buyer's market, and then it kind of was like 50-50. Sometimes that's a little tough, and especially during this COVID-19, it really has been. But I tell you, I've had my best year this year so far in this industry, in real estate, and I had multiple offers on my listing. I could barely even keep it open before people. I had to just shut it down, and I got the offers in like five days. We had a contract on the house, and then I've had other buyers who were looking at homes because it is a seller's market, and they had multiple offers on those as well. There were some that I won and some that I didn't. The ones that I didn't win, it was because the people were bidding $30,000, $40,000, $50,000, $70,000 over the asking price.
No way.
Yes, they are out there. I mean, I'm working with several clients right now, and I have one client now, a nice young couple, and it's almost like we're chasing houses. We put in a criteria that the clients give us, based on, the number of bedrooms and all that, kind of like what you were asking me earlier. And then the information goes out to them automatically. And then what they do is we can see what they're looking at. They, put a heart next to the one that they like or what have you. So they send a list to me and say, listen, this is what I want to do. I want to go out and check these houses out. But sometimes by the time they send me the house, it's under contract. Yesterday, I was showing a house. Literally, I was showing my client a house. I got a phone call and a text, and the house that we were scheduled to go to after that was canceled, the showing. The owner, the seller, said, I have an offer. I don't want to show this house anymore. I'm done. So it's happening. I mean, it literally just happened to me yesterday. And my clients were a little disappointed because they said that was their favorite, of course. So obviously it was everyone's favorite, but that's happening. So it really is, it's a really interesting market right now. So if you want to sell your home, this is probably, I would say, a very good time to do that if you're in a position to do that. So.
Wow. It's interesting. So once you do this, you got to look at pre-inspection,
yes,
lead, radon, rodents, look at wiring, those sorts of things. Who who does that? Who does the inspection process? Is it coming through the mortgage company? Is it coming through the realtor company? Who does the inspections?
So we have a number of inspector companies that we use, and once you come to an agreement and what we call ratify a contract. A ratified contract is the agreement between the seller and the buyer on the price of the house. Then we set up a time, and a lot of the companies now, a lot of the inspection companies are kind of full service. They will offer radon inspection, termites, wood destroying insects, but there's certain areas that probably cater to a certain type of inspection more so than another one. Then you also have well and septic for the homes that have well and septic. So those are separate companies. So the experts in those specific areas would go out and do an inspection. Once you get the home inspection, you take a look at the items that have checked, that meet your specifications or that. So I always say to people when they get the inspection report, I said, have an open mind. There are some people who are good at carpentry. There may be some wood missing someplace. So it's not necessarily that it's a bad thing. It's just something that perhaps you want it taken care of because you may not be able to, and that may not be your inspection. So once you agree on the inspection, you go back to the seller and to the seller's agent. That's the owner, the person that's actually selling the house. And you just kind of, tell them this is what I want in order to continue our contract on this home. And then, eventually, and usually you come to an agreement. And then after that, the lender takes care of the appraisal portion of that. That's usually not something that the buyer, it's usually the seller and the lender. It's usually the seller wants it to appraise, and the buyer wants it to appraise, and the lender wants it to appraise. I think the lender wants it to appraise.
Yeah, you do too.
But, yeah.
You want a headache.
So
exactly.
Mr. Lender, let's talk about appraising. So if you're telling me that houses are going $20,000, $30,000, $40,000, $50,000 over asking, can that appraise?
Probably not.
So what do? They have to come out of pocket with that?
Exactly.
Oh.
Yes.
Oh, okay.
They are coming out of pocket. It's amazing. They say they don't care. They want the house.
Let's talk about some home buying programs. You said that you use some state, local, and federal programs. I know there's one called NACA, which is a Neighborhood Corporation for Neighborhood Assistance Corporation of America. How do you vest into those programs?
So most of the programs are income-based. Okay, so you have to be at a certain area of income to qualify. Some of them, you need a credit score. It basically depends on where you want to buy. I'm licensed in Maryland, Virginia, and DC, so I only know the programs around those areas.
No, that's okay, because the overall process is important to individuals. So if I'm looking at a local or a state or a federal subsidized loan process, would I still go to my mortgage guy, or would I go through these individual companies?
Well, the specific program that you came out, they have their own lenders that would give them the money. But I mean, I never used it before, so I couldn't tell.
I don't know either. I just understand from a caller from a previous show, and she mentioned how you go through, it's like a classroom you go to.
Yeah.
It's a process, but it teaches you how to maintain your property, how to build equity, how to not just live in the home as if you're living in an apartment, but how to invest and make it better. So I don't know, but I want to make sure that my listening and viewing audience has an opportunity to understand this process.
Well, most programs, you're going to need to take a class anyway.
Okay. Oh, who does that?
Well, you can do it online and take a class online. It's 2 hours and, you learn.
Yeah. I didn't know. I mean, I had never lived in a home until I became an adult, but my husband did, thank God. So he knew about the mowing and he knew about the maintenance and he knew about fixing stuff. And thank God he's an engineer, so he's smart. He's a smart guy. But a lot of us don't know. And it's important that we know how to access the home buying process. And I think this is where you guys come in. It makes it where it's less intimidating. You know, if I'm going into an office and I see the two of your faces, and I believe that I'm being welcomed, it'll encourage me if I can't do it at that point. But like you said to your other client, Carlos, if you manage it and structure your income and your savings this way, you're talking at the end of the year that you can purchase a home. Because it doesn't happen automatically oftentimes.
No. Yeah, I've had clients come to me and they say they're ready to buy a house, and then they go to a mortgage lender and they go through the process of seeing if they could get pre-approved, and it actually gives them a reference point as to where they need to go and what they need to do in order to be prepared.
Sure.
So I have a client that I use as an example all the time. This particular client couldn't get a rental. We looked at several rentals, and it was because of in a situation. Sometimes people have medical or change in lifestyle. Perhaps a divorce or what have you. Different things happen, and your finances are impacted greatly, and you don't really know how much it's impacted until you try to do something financially, and you're just kind of like, what's going on there? So this particular client and I actually kind of went to bat for them, and I met with the owner and I met with the listing agent, and I said, let's give this person a chance. We wrote a letter. We had a meeting. There were some other things that we could do to try and some other things that we offered to do. Sometimes there's some additional payments that you can put in place, but sometimes people just need a chance. They had the income, but they just had a situation. So fast forward, I guess after renting there for about 1.5 years, the owner actually approached them to ask them if they wanted to purchase that property. So there are some really great stories that come out of being patient and being persistent, and definitely being debt-free. And you can certainly, that's just one of my stories that I just love to tell. And I have gotten, it just takes a little time. Sometimes it takes a year to get yourself together, or maybe 2 years, but you're only talking about 12 months or 24 months.
That's right.
When you think
Carlos, do you have any take homes for us as a mortgage lender? What's the take home?
Work on your credit, save some money, and if you have good income, you, like I said, you don't need that much. You don't need 20% to buy a home. Okay. All you need is 3 to 3.5%.
Okay. Well, I got to tell you guys, this has been a really informative session. And again, my motto is debt is a disease that can be cured. And we've got to empower Americans to know that we can. All things are possible. Faith over fear. Instead of walking and being fearful of not doing something different, like being in home ownership, try it. So I appreciate you guys. Thank you for your friendly, lovely, beautiful faces. Thank you for sitting here on Zoom. And you guys have a great night.
You too.
You too, Paula. Thank you. Carlos, it was my honor.
My honor too.
Yes, thank you.
Hopefully we can work together in the future.
I hope so. That would be fantastic. I'll be calling you.
Okay, yes. Thank you.
Thank you.
Have a good night, guys.
Good night.
So we got the guts and the inside review of what it takes to buy a home. It is the American dream. 60% of Americans own their own homes. It's the pathway to generational wealth. Why? When you amass equity by saving, every time you make a mortgage payment, you're owning a little bit more of your home. Imagine you purchase a home when you're 30, you take out a 30-year mortgage. But if you get aggressive, you get a pay raise, change of lifestyle, you can pay that off in 15 to 20 years. You save tens of thousands of dollars, but you're also building equity. If you decide to downsize, this money comes with you. If you decide that you want to pass it along to your children, you can. You can't do that if you're a renter because you don't own your own. I have nothing against renting. I lived, I rented. I was very thankful because it let me have a lot more flexibility. But if you want to own your own home, this show is letting you know that you can. The primary sponsor of my show is EAJ1023radio.com. This has been amazing. You're amazing. Stick with me. We're not just going to discuss finances, but I'm going to move to healthcare providers as some of my resources. I love you. Have an amazing day.